Imagine waking up one morning and discovering that a country on the brink of collapse has quietly moved the last thing holding its sovereignty. Not money, not all, but its future. No headlines, no press conference, no warning, just heavy containers rolling into a Caribbean port at midnight, soldiers sealing the area, and foreign ships waiting in silence. By the time the world noticed, it was already too late. Hundreds of tons of gold, wealth collected over generations, were no longer on that nation's soil. They were crossing the ocean under diplomatic protection, untouchable, invisible, unstoppable. This wasn't theft. This wasn't war. This was something far more dangerous. Because when gold moves quietly between nations, history usually follows. Washington panicked, markets reacted, and Beijing stayed silent. This wasn't just about one failing country. This was about a new rulebook being written for global power. A rulebook where sanctions don't work, where dollars don't decide everything, and where gold once again becomes a weapon. Tonight, you're not watching news. You're watching the opening chapter of a global shift that could redefine money, power, and survival in the 21st century. Stay with me, because what happened next didn't just shock governments. It exposed how fragile the entire global financial system really is. In the final days of December, while the world was distracted by holidays, markets closing early, and year-end optimism, something unusual began unfolding on the northern coast of South America. At a port that had seen decades of oil exports and mineral shipments, activity suddenly spiked. Not chaotic activity, controlled activity. Military vehicles appeared where there were usually none. Civilian access was restricted. Shipping schedules were altered without explanation. Satellite analysts noticed something odd. Ships registered to foreign state-linked companies, arriving without public manifests. At first, intelligence agencies dismissed it as routine. Venezuela had long relied on quiet exports to survive sanctions. All shipments disguised under shell companies were nothing new. But this was different. Sources inside the port began whispering, a word that hadn't been spoken out loud in years. Gold, not small amounts, not symbolic shipments, but reserves, the kind nations protect until their final breath. For decades, Venezuela's gold had been more than metal. It was psychological insurance. Even as inflation destroyed the currency, even as shelves emptied and citizens fled, the gold remained untouched, locked deep inside vaults as proof that the nation still possessed something real. That gold represented sovereignty, and now it was moving. What made this transfer extraordinary wasn't just the quantity, it was the method. No international banks, no Western clearing houses, no London vaults, no New York intermediaries. Instead, the movement occurred through diplomatic channels, legally shielded, immune from inspection. By the time confirmation reached foreign intelligence desks, the ships were already days into their journey. The destination wasn't Europe. It wasn't the Middle East. It was Asia, and more specifically China. Here's where the story turns from economics into strategy. This was not an open market sale. No auction, no price discovery, no transparent accounting. Official documents used vague language, strategic cooperation, reserve partnership, long-term financial alignment, words designed to explain everything and nothing. Financial analysts immediately recognized the pattern. This wasn't trade, this was collateral. Venezuela's government, desperate for survival, had exchanged its final safety net for short-term oxygen, and China had accepted, quietly, efficiently, without moral lectures or political conditions. To understand why this matters, you need to understand what gold means in geopolitics. Gold is not an investment to central banks. It is not a commodity. It is trust without permission. It does not rely on networks. It cannot be frozen with software. It cannot be printed. When nations stop trusting systems, they turn to gold. And China has been preparing for this moment for decades. Officially, Beijing reports modest gold holdings. Unofficially, analysts believe its true reserves are far larger, spread across state entities, shadow institutions, and sovereign funds. Why hide it? Because announcing large gold accumulation signals distrust in the current system, and China prefers silent positioning over loud confrontation. now at hundreds of tons from a collapsing state. This wasn't about Venezuela. It was about proof. Proof that China can offer protection where the West offers punishment. Proof that sanctions have loopholes. Proof that a parallel financial system is not theoretical, it's operational. The markets felt it immediately. Gold prices jumped. Currencies wobbled. Risk models recalibrated. Behind closed doors, emergency briefings were called, not about missiles or troops, but about balance sheets and reserve flows. Because once gold starts moving outside the traditional system, control becomes suggestion, not law. And this was only the beginning. To understand the true impact of this transfer, you have to zoom out, far beyond Venezuela, far beyond China. You have to look at a world already under strain. The United States is carrying historic levels of debt, dependent on constant global demand for its bonds. Europe is struggling with stagnation and political fragmentation. Developing nations are drowning in dollar-denominated loans that grow heavier every time interest rates rise. And trust, the invisible glue holding the system together, is thinning. When Russia was cut off from global payment systems years earlier, every nation noticed, not because they supported Russia, but because they learned a lesson. Access can be revoked. Assets can be frozen. Rules can change overnight. Gold doesn't care about politics. That's why central banks everywhere have been buying it aggressively. What Venezuela did was extreme, but it wasn't irrational. It moved its wealth before total collapse, before regime change, before internal fracture, before foreign intervention, and it moved it to a partner that demands loyalty, not reform. For China, the benefits extend far beyond metal. Control over reserves means leverage over all contracts. It means preferential access to ports. It means strategic presence in a region historically dominated by the United States. And, unlike military bases, financial entanglement doesn't trigger alarms until it's too late. This is how modern power expands, not with tanks, with balance sheets. The real danger isn't that the dollar disappears tomorrow. It's that alternatives are becoming viable. Every transaction settled outside the dollar weakens its gravity. Every nation that diversifies reserves reduces dependence. No single move breaks the system, but momentum does. History shows us this pattern again and again. Empires don't fall from attack. They erode from confidence loss. The gold standard collapsed when trust collapsed. Bretton Woods emerged from chaos. Every reset followed imbalance. What we're witnessing now isn't collapse, it's transition. And transitions are always unstable. For investors, this changes everything. Risk is no longer just market volatility. It's jurisdiction risk, access risk, systemic risk. Physical assets regain importance. Strategic commodities matter again. Liquidity is no longer guaranteed. For Venezuela, the cost is tragic. That gold could have been a foundation for rebuilding. Instead, it has become a lifeline that delays collapse, not prevents it. When the regime eventually falls, the vault will be empty, and recovery will begin from zero. For the rest of the world, the message is clear. The rules are shifting. Power is decentralizing, and gold is once again speaking louder than currencies. The ships have already sailed. The question isn't whether a reset is coming. The question is, who is prepared for it? Because while governments debate and institutions hesitate, the future is being secured quietly, one shipment at a time.